All right, let us return now to the call.
I mean, banks use this product to...
No, they do not. You've been watching too much TikTok. Banks do not use whole life. Not ever. Banks nowhere, no banks sell.
I would respectfully disagree
No,
with
they
that.
don't. They do not use whole life insurance.
What bank?
Well, we could Google it and see what typically banks do with their money, but I believe...
Typically, banks never put money... Let me tell you what banks do. They put it in bonds. They're required to. They wouldn't be allowed by federal regulations to put it in whole life. It's not a place to invest money because it's a horrible investment. The rate of return 4%. Sucks, and when you die, you lose your cash value.
Okay, so I think it would be fair to say Dave was very confident there. There wasn't a lot of gray area, a little, wiggle room. He clearly told that guy, banks not only don't in practice buy whole life insurance policies, but they would not be legally allowed to because they're such terrible places to put your money, right? We can all agree that that's what Dave Ramsey just said there. So what's funny about that is, and why I was stunned when I heard this exchange originally, at first I thought Dave was just saying or making the point that what the banks do is buy universal life and not whole life. Okay, he still would be wrong, as we'll see in a minute, but that's what I thought he was making. I just thought he was being kind of unfair to the guy when that's not the point. The caller clearly just meant banks buy life insurance as a place to store cash. They don't just do it purely for the death benefit coverage of like key employees or whatever. That part of why they use this strategy is because it makes a lot of sense financially, not just for the pure, hedge against an uncertain outcome. But the more Dave talked again, and then when he said they wouldn't even be allowed to by regulation, then it was clear. And there was no ifs, ands, or buts. He said, period, they don't do it at all. No bank does it. All right. So again, that's just wrong. So, and the reason that's funny is there is an entire asset class called BOLI, which stands for bank-owned life insurance. Right. And that's not referring to term policies that banks have on key employees. So here I'm taking these figures from BoliColi.com, right? So there's a whole website. This guy's business is dedicated to setting up banks. And so Coli is company-owned life or corporate-owned life insurance, setting these institutions up with appropriate life insurance policies. So his latest figures, he says, as of the end of June 2023, U.S. banks had permanent life insurance in place with cash surrender value of about $184.6 billion. Okay, so rounding $185 billion in cash value. That's just the face death rate. That's just cash value that banks owned of permanent life insurance as of the end of second quarter 2023. And Dave Ramsey is saying this is a stupid place to put your money. So apparently none of these bankers listen to Dave Ramsey's show, or they do in Chortle. Okay, now let me be clear. Most of my understanding is most of what the banks currently own is fixed UL, right? So not like variable UL and indexed and things like that, just a plain vanilla UL product, which is still, has cash surrender value and would be called permanent life insurance. They do, though, some of them own whole life policies. Okay, so again, Dave is clearly wrong, but also by extension, whole life is more conservative, is older, is more traditional than UL. And so if regulators allow the banks to own all this UL, they certainly would allow them to own whole life. And also, if you went back in time, UL is a newer product, right? There was a period in which if you own permanent life insurance, it was just whole life. That's the only thing available. So clearly, back then, banks wanted to own it, it would be whole life. All right, so here, again, earlier in the call, I guess there were a few points where Dave was technically correct, and I could see how he was digging his heels in and was just being unforgiving to the caller and not trying to understand where's the guy coming from. But here, no, Dave is just flatly saying things that are demonstrably false with confidence, right? My problem is not that he happened to be wrong on stuff. Like if he said, I'd be surprised if banks owned life insurance because in my research, it seems like it's a bad investment. Really, you think they do? What? Can you send me the story? Maybe we'll hang up and you talk to my call screener and give them because I want to look into this. If he said that, I wouldn't be making fun of him. But no, with confidence, he's telling the guy he's wrong when there's literally an asset class called bank-owned life insurance. So it's shocking to me that, I don't know what's worse, if Dave knows that and just doesn't care and is just blowing the guy up, or what's probably more likely is if Dave doesn't know that and yet he's speaking with such authority on the topic when he doesn't even know that there's this whole thing called bully.
Hey everybody, this is Bob Murphy. Thanks for listening to this clip from the Infi podcast. If you like what you heard and want to hear more, please consider subscribing and share this video with others. We've got new episodes dropping every Friday with more insightful discussions. Stay tuned.